All right, let's take a look at some of these small caps. My primary, I guess, forte when I was an institutional trader was small cap and micro cap. So I know this area pretty well, but the same rules apply in looking at charts of small caps as in charts of anything because who trades? Well, human beings trade. And human beings experience emotions regardless of their style. So I'm not going to give any trade recommendations, but this is just kind of a little quick technical analysis lesson. And I think if you become a member, well, actually, if you're reading this, you are a member. So let me um, take that back. But as a member, I think you are going to learn a lot about the way the market really works and about what institutional traders really do. And I kind of get a little upset when I see this whole, it's a lot of these trading schools that teach Fibonacci theory and Gann theory. And, in the institutional trading world, that stuff just doesn't exist. I mean, to me, that's like, it's like science fiction. You know what I mean? So anyway, let's just take a look at some basic principles here. Well, here we can see that this level here that was resistance at 189 became support. Now, how does a level that's resistance kind of miraculously turn into support? The answer is it's because of seller's remorse, or that's the traditional answer. People sold here, and when the market went higher, a lot of them regret doing so, and they tell themselves they're going to buy their shares back, but only if they can get them for the same price they sold them at. So we have remorseful sellers placing buy orders at their selling price. And if there's enough of these remorseful sellers placing buy orders, the level that was resistance can convert into support. And as we can see, at least for now, that's what's happened here. Another thing this chart shows is, you know what? Let me just, I didn't put this on my chart, but let me put it in here. Because this is the opposite over here now. This is support becoming resistance. This happens because of buyer's remorse. And ironically enough, well, actually, it's not ironic, but it's pretty much at the same level, maybe a little bit higher. This is buyer's remorse. People buy and the shares go lower. A lot of the people who bought regret doing so, and they tell themselves, I made a mistake. I want out. But I don't want to lose any money, so I'm going to sell my shares if they get back up to the same price that I bought them at. So we have remorseful buyers placing sell orders at the same price that they paid. So we have, if there's enough of these remorseful buyers placing sell orders, the level that was support turns into resistance. Now, sometimes a resistance level or a support level can stay intact for a long time. We call this market memory. Here we can see we hit resistance around 200. About 6 months later, we hit it at pretty much the exact same place. $200 is a what we call a psychological level. People like to buy and sell things at nice round levels, and $200 is certainly the case for it being a round level. So how does this happen? Well, we could say it's buyer's remorse, the same thing. People that bought up here regret doing so, and they tell themselves if it gets back to their price, they're going to sell to get out. So a lot of times we get resistance at former peaks. A lot of times we get resistance at former support levels. A lot of times we get support at former resistance levels. And down here we have a level that was support around 164. So we see support here, support here. Now, how does this happen? Well, I mean, maybe there were people who sold who regret doing so and tell themselves they're going to buy their shares back if they come back down to the same price. Because imagine that you sell right at the bottom of this, you're like the last person to sell. So you're probably feeling pretty embarrassed and humiliated. Anyway, people tell themselves I'm going to buy my shares back. Maybe you have people like us that are looking at charts. Maybe you have algorithmic programs that recognize a former bottom. Could be a lot of different things. But the good thing about charting is we don't really need to understand why these levels occur at the levels they do, or why support and resistance occurs at the levels they do a lot of time. Like, we kind of have an idea why there was resistance at 200. Well, it's a nice round level. But why is 164 important? Why is 189 important? That we don't know. But hey, man, do you really know how the electricity works? But if you flick on the light switch, it's going to, it's going to come on. So this is our Russell 2000 ETF, IWM. And this tracks the Russell 2000 index, which is a small cap index. So it's different than the S&P 500 or the Dow. All right, let's go take a look at the next part of our small cap world. This is the value sector. All right. What we just looked at was the regular Russell 2000. This is the Russell 2000 value. And we can see here the same thing. Resistance becomes support. Remember, it's that seller's remorse. Now, I think there's probably a good chance that this support breaks and we go lower. And I'm going to put that on here like that. Again, this is not a trade recommendation, but I'm just trying to show you that as a former professional institutional trader, this is the type of stuff that we look at on charts. We're not looking at any esoteric mumbo jumbo. All right, so we see resistance become support. Now notice what I'm keying in on here, right? We have, I'm going to go back to my pen here. Markets don't go in straight lines. They go in peaks and valleys. And when your peak is forming at a lower level than your prior peak, I mean, this one was a little bit higher, but I mean, a little bit lower, but this one here is lower than here. So when you have these peaks forming at lower levels, we call that lower highs. And this is important because it shows something about the supply and demand dynamics in a market. Every chart needs to be looked at through the prism of supply and demand. And there's a lot of really bad stuff out there, ranging from people who are working hard and trying but have no idea what they're doing, and all the way to people that are just blatant scammers and blatant fraudsters. I like to talk about GAN theory because it's so easily disproven. You know, there's a guy named W.D. Gann who, for some reason, his writings or whatever have obtained this like mythical status about how he was this like super genius and he had all these like, you know, it's like really far out stuff. It's like Twilight Zone stuff. But his son was interviewed and his son said, look, my dad was like nothing like that. You know, he was an unsuccessful stockbroker. He started a newsletter. He was moderately successful. And that was it. If he saw a Gann chart himself, he wouldn't even know what it is. So I don't even know why I'm on this tangent, but I guess it's because I get upset that people pay money and they get, you know, ripped off by thinking that that stuff is the secret. But the secret is the stuff that we teach over here at Stock Market Jobber. Levels, trends, momentum, and psychology. So what are lower highs? Psychology. As time passes, sellers are becoming more aggressive. They're willing to accept lower prices. Why does resistance turn into support? Psychology. Seller's remorse. Why does support turn into resistance like we saw? Buyer's remorse. So charts are graphical illustrations of psychology. And I can understand why people have a hard time with it because there's just so much stuff out there that's just complete garbage. And that's why I decided to, at this point in my career, to teach, to quote unquote, not to use an overused expression, but to quote unquote give back. All right, let's just take a look at the microcap ETF. I suppose I should have explained what we're looking at here. ETFs are exchange traded funds. They trade just like stocks, but they're designed, these ETFs are designed to track these specific indices. So this tracks the microcap index. The first thing we looked at tracks the Russell 2000. The second thing tracks the Russell 2000 value. And we can see this on almost any chart, this psychology. And you know what? Here's another example, which I didn't write up. I'm going to put it out here. So here we have support becomes resistance. Support becomes resistance. Buyer's remorse. Okay? People buy, the price goes lower, they regret doing so, they tell themselves, I'm going to sell if I can get out of break even. And we have remorseful buyers placing sell orders at their buy price, and if there's enough, then the level converts from support into resistance. And we can see that here, and we can see it here. Here we have resistance turning into support. You get it now? You get it yet? It's like, dude, it doesn't need to be that complicated. Just focus on what the important levels are. Down here, we have support around 103. We have these lower highs. My guess is there's a good chance this breaks and revisits this level. All right, thanks a lot, everybody. That's all I wanted to cover today. Just a little bit of an overview of the small cap world. Thank you, and I'll talk to you soon.